Good evening, guys. Ken at Tortoise Capital. This is the strategy podcast for August 6, 2020. So I mentioned yesterday that I wrote an essay as required for my our new commanding general, describing what I'd done on my summer vacation here, and I decided to write it as a introductory letter from me to my students and me to my new teaching partners and me to some of my some of the new doctoral awardees that we have that are just starting their doctoral journey. And so I wrote the essay for them as an introduction and a background to the work that I do, and then only indirectly to the commanding general. And so I distributed that to everybody in the department, and it seemed to really resonate with them. And so then everybody started sharing their essays with each other, and it turned out to be a nice way to get some collaborative learning and some crosstalk. And so I don't know if the commanding general was thinking of that, so it's an unintended consequence of deciding to just do it that way. So there's already been a really good payoff. I also decided to send that to some other people that I'm doing external collaboration with, because it helps them get the backstory of who they're working with. And so that's why I posted it in the chat room, and as well as you guys can just see what you're getting into. So I did while I'm on that subject, I just did a learning journal entry about that. So I thought I would just give you an example of learning journals and some of the things that I get out of this free writing. I mentioned yesterday, why we should write. So I actually had to clean up some of the language that I used was a little bit more colorful than this on the first one, but since I wanted to use it for other purposes, I decided to clean it up a little bit. So I'm just going to read it, and I'm going to talk about what I wrote here. So I was tasked to do something at work, and it felt like something trivial and dumb at first glance. Yep, yeah. But since dumb foolery was my knee-jerk response, I decided to take that as an indictment of my own state of mind when asked to do anything by anyone. So that's sort of my default response to any authority. So when they ask me to do stuff, I notice myself just treating it like, well, that's just dumb. But in this case, and maybe in other cases too, I have no evidence of the intention of being asked to write that memo. So how I respond after I reflect on it is all about how I react to the environmental triggers. So I'm going to give thanks to Epictetus, the Roman slave Stoic philosopher, and Miyamoto Musashi, my spirit guides. So this is a chance for me to try to be a better person. So I noticed that my default response is always, well, why do I got to do that? Why are they making me do it? And then assume the worst. And I wonder what the fool is wrong with my internal wiring, which immediately finds the negative interpretation. Is it nature? Was I born that way, or have I been conditioned into that? Well, Epictetus, so you can spend a lot of time thinking about nature or nurture or why I am a certain way. I mean, I could, if I was going to think about it. Epictetus would say, and I'm going to paraphrase him, so who cares why you are the way you are, whether it's nature or nurture? Who cares? Your initial response is just monkey brain. So long, are you just a monkey? Well, let's see. What do you do with your foolish initial response or your initial beautiful response? Even if I had done something, proper, and taken it as if it was just a great opportunity to do, and just really amazed at the beauty of the idea. So it doesn't really matter what the initial response was, either foolish or beautiful. Epictetus would say, well, the only thing that matters is what you do afterwards, prompted by those feelings. And then Musashi would say, don't engage in useless activities. So no matter what that initial response was, whether it was on my best day or my worst day, it actually doesn't matter what I initially felt about it. The only thing that matters is after I decide what to do, then I can be judged. And if I chose to do something and I did it well, but it wasn't on anything useful, Musashi would say, why did you spend time doing something really well that didn't matter? So it's not enough just to do well, it's also doing it on the right things. So when I listen to those two spirit guides, I take my beating like a man, and now I'm going to take this piece of scrap wood and try to do something good with it by discovering its hidden purpose and true value, to see what I can do with it that makes things better. If I can, within the limits of my skill, which shall only be revealed through effortful action, aiming high to see what may be. So I put in parentheses this piece of scrap wood. What is the piece of scrap wood? The piece of scrap wood was whatever that initial response was to this external tasking. I have to do this thing. They just handed me what I felt like was a worthless piece of wood, a worthless task to do. And in my mind, if I disparage that, I'm thinking of it just like a piece of scrap wood. But now, this is actually where it starts to get important, I think. Think of the phrase scrap wood. If I call that piece of wood or that task a piece of scrap, then that's something that I put on the wood, not an inherent quality of the wood itself, right? There's nothing about that wood that is scrap. It's my projection. So if I see leftover wood that was not used in a process, let's say I was making something and I cut it to fit and I did all that, all the wood that's left over, if I just think of that as scrap, well, why do I think of it as scrap? It's just wood that I didn't use. But if I label it as scrap wood, then I see it as scrap wood, and I assume that there's no value because it wasn't used on that particular project. But there's a conservation of value and potential in the world, just like energy. So am I really so sure that it's useless? If I, without even thinking about it, call it a piece of scrap wood, that says more about me than about the wood. So let me just calm down and study that piece of wood and let it speak to me. And maybe if I just listen a little more and not be in a hurry all the time, the purpose of what it could be may become apparent. And when you think about that, you see that the quality of things emerges from the relationship between you, the wood, and the world. And there's a chance that something new could be expressed in the intersection of those three things: you, the wood, and the world. The wood needs me to become something beyond itself, and I need the wood to become something more than what I am. And the world needs both of us just as we are in order to be complete. So if it wasn't, so if the world didn't have me and didn't have the wood, it would be incomplete. So there's something important about just being you, just being me, and just being the wood, just as you are, so that the world can be complete. Now, fortunately for us, the world is wise and non-judgmental, and will just accept us as we are, no matter how we choose, because the world is a big place, and it has a lot of things to worry about or to enjoy than just our little trials and tribulations. So the world's going to be just fine. It's got a lot of things going on. So it's not judging us. It's got other things to do. So don't worry about it. The judgment comes from within you, and that's just a voice in your head. So it doesn't have to be that way. So I decide that if I can cultivate more of a caretaker craftsman mindset, then maybe I wouldn't always be looking past these opportunities to do more that I just blissfully miss in my own ignorance. Maybe if I just slowed down and tried to be a caretaker and a craftsman and a steward of all these gifts, maybe I could do better with the opportunities that I do have. So I'm going to try to do better on that. We'll see. We'll see if that works. That's my intention. But like Epictetus would say, it doesn't matter what it feels like right now. It's only if I actually do anything about it. And then Musashi would say, is this really something worth doing? Yeah, and I think this is a non-trivial effort to try to be more of a caretaker, more of a craftsman, and to not label wood as scrap wood, but just to accept it what it is and see what it is that I can do with it. Even if all it is an opportunity for me to just sit quietly and think about things beyond myself. Even if I can't come up with something to do with it, that's not everything. I mean, sometimes it's okay just to sit there and be still and just reflect on the world and yourself and your place in it. And everything have to always be turned into a project like right now. I mean, come on. So I realized as I started thinking about that essay, when I decided to write it the way I did, and then I see some of the feedback that I'm already getting from my peers, it wasn't necessary to just comply, like to just do the minimum. I mean, I could have done it just the minimum, but I took a chance to make more of that as an opportunity to do something going beyond just the simple minimum requirement, but to try to see how I might create more value out of it. And that at least gives me an opportunity to talk about these subjects with you and this whole notion of craftsmanship and caretaking and journaling. So for me, what really jumped out at me was this a couple things. When I just realized how often I snivel about being asked to do things when it was somebody else's idea. I just have a default position of not wanting to do it. And so I know that, and I'm reminded of that now. So I got to stop being such a jerk about it. And it may be that they asked me to do something that's according to their intention, I may not have really found a lot of value. Well, let's suppose that it came to be revealed that the commanding general really was just checking to see if we were screwing off on the Army's time. Maybe that was his intention. That doesn't mean that's my intention, and it doesn't mean I have to limit myself because of his intention. I can just look at it for what it is. It's a requirement to do something, and then I can place the meaning on it that I choose. And I don't have to think poorly of him or even think about him at all or his intention. That's his cross to bear, not my job. My job is to do something with whatever is brought to my attention. So I just got to let go of the judgment sooner and more quickly get to how can I take this piece of wood, not scrap wood, how can I take this piece of wood and do something beautiful with it? What does the wood want to do? What could it do? What are all the ways that it might be used? And even if I don't use it now, I'm not throwing it into the discard pile. That's like having an idea for a trading plan and you don't see an immediate use for it or it doesn't immediately pay off. You don't discard that. You just place it in the pile of non-applied ideas yet, because that's somehow contributing to the body of knowledge. Even if it doesn't work now, there may come a time when it works again. So don't discard those pieces of wood. We don't know how we might use that in the future yet. So improving my response And decoupling his intention from my action was a moment of Zen for me. This idea of it really doesn't matter if it's nature or nurture, because you're always at that starting place anyway. What are you going to do now? What are you going to do? You know, the explanation of why you arrived at that place is not nearly as interesting or important as where you're going or what's next or what are you going to do about it. So that insight, the scrapwood insight, was legit. And then this notion of the you, the wood, and the world, that each needs the other. And then quality is the relationship that connects. And that is really about intention and then action. That's right action, right intention or right thought in the Buddhist cycle, and then right action. So, and I conclude with the commitment to being more of a caretaker and a craftsman. Stop being in such a hurry, making more use of the time that's available. There's always a little bit less than you had before. So the things that you choose to do with each next moment actually become more and more important, since we have less and less time to turn it into action mathematically. So take a little more care with each next action. Forgive yourself a little faster. The world's already forgiven you and has moved on to the next thing. Maybe we could do some of that. So there we are. That was my moment of Zen and journaling today. Well, let's see what happened today. This market just doesn't care what I think or feel. It just does what it does. So today, it responded to yesterday's. Yesterday was a gap up and a tiny little range, and pushed the 10-day and 30-day higher. And it was testing the RL90. And then my worry yesterday was to see, well, what's it gonna do with this gap in here? Is it gonna preserve that? And so my thought yesterday, if you recall, was I wanted to maintain at least half of this week's gains. So I was thinking of a stop here. I'd considered a stop down here, and I said, no, not really. I looked at the Dragon Peak. So any of those were places that I would have been happy to cash today. I felt like the low of the day yesterday was a little bit too tight. That may have actually ticked you out today if you had done that, but then a hybrid frog would have got you back in. And so I felt more like the baby dragon yesterday, or the keeping half of the range was better. And so all three of those would have been fine today. And then it actually held the low. And then, as you can see, it did nothing but just move directionally higher today and push the 10-day high and 30-day high even higher. So that's all up now at 334.5. The high of the day, the 10-day high, and the 30-day high. And it gave back practically nothing at the close. So it's like 0.07% below that high. And it's just a fraction away from that Z2. So it actually got to yesterday's Z2. So if we look at yesterday's Z2 here, almost like Xeno Zero, it got to yesterday's Z2 And now today's Z2 pushes just a little bit higher. So maybe that will serve to pull us up higher tomorrow. A double-sized range. You know, yesterday was a small range, and then we actually got two of those. Plus, out of today. So that's just an unqualified good day at work today, man. Not much to see on the upside. If it breaks through a new 10-day high and a 30-day high here at 334.5, Z2 is the next price level. And then if that breaks, it gets beyond Z2, past the floodplain. Let's say if it just does another move like it did today. Today was $3.50. So, you know, more than 1%. So a little more than one ATR. So that could get to 338 tomorrow if it just turns in another day like today. But it's a Friday, and how much of this week and the gains of this week do they, which is like a 3% move, how much of that do they want to risk carrying overnight, over the weekend? So I wouldn't be surprised to see some profit taking tomorrow. So in my view, the places where I would consider, I think the RL90 and halfway up today's stack would be a reasonable place to lock in the gains from this week so far. I could see today's low being a support level, and then I would just keep these other ones in place. But that's just a really good day at work today. We'll notice that when we look back, you know, to the 10-day look back period, from the high 10-day high down to the 10-day low, whether that's here or there, that's a 4.5% move, and that's fully 4 daily ATRs really in the last 6 days it's made in that move. The 30 period or the 10 period regression just got a lot steeper today. It could still get steeper, you know, because it's going to drop off a low, and then this could be, you know, if tomorrow was an update, this thing could get even steeper up to here. So the, you know, the slope of that RL10 is getting pretty steep. Pretty amazing move. Looking at support levels on the downside. I would take the RL10 and the RL90 and halfway up the stack today, about, you know, call that 333 even. That's where I'm going to have my stop. The low of the day, 331.2, which was also yesterday's low. That's a fraction away from the baby dragon, which is at 330.5. Closing the gap at 330.25. So in my view, there's no reason to stop down here, because if it breaks today's low and the 2-day low, there's no resistance anyway. It's just going to run right down there anyway. So there's no point in having an intermediate stop. You either pick this one or this one. And for me, the second, I'd rather keep that little red brick. Then the peak of the dragon here is at 328.9. The Z1 and the weekly low is all clustered in here at 327.5-ish. The next one down is the spine of the dragon, which is also the peak of the RL10. That's about halfway down the stack. So the RL10 peak and the spine of the dragon at 326.6. Then I would see tomorrow's PSAR is going to be about 325.25. Today's PSAR was 324.5. That's also the bottom skin of the dragon. The long-term peak RL270 fair value was 323. God, that seems so long ago. Now that we're up here at 333. Then all the way down here to the Bollinger Band mean at 319, which is also the 10-day low. Now, when this drops off tomorrow, the new 10-day low is going to be here, and that's so close that it might as well be the same. So just quite a week. I mean, quite a week. And tomorrow, being Friday, going into the weekend, how much of this does it hold on, or does it press on? If it turns in a great day and they're willing to hold that overnight and over the weekend, what a powerful narrative about the upside that'll be. And the Democrats will be saying, look at the people who are believing in the return to sanity of a Biden presidency. I mean, somebody's going to make that claim. And then other people say, no, as Biden continues to make these unbelievably crazy political ads, like he's driving a Corvette today, and when you look at that, all you can think is, God, somebody take the keys away from him before he hurts himself or hurts somebody else. The guy's so tone deaf, it's ridiculous. So the two least competent septuagenarians that you could imagine in the country, both running for president. Unbelievable. All right, so let's see what we got. What happened today? So for the U.S. indexes, we had the S&P at 0.67. We had the diamonds at 0.7. We had the Russell already starting to give back a little bit at minus 0.01. And then treasuries at 0.56. So the large caps are doing well, but the small cap guys, I think, just decided to cash what they had today. And so that would lead me to believe they're prepared to trade that to the short side tomorrow. So I think tomorrow has the opportunity to really be a tactical day. And that means tomorrow, especially, you need to be ready to take it when you get it. Because my belief is there's probably a lower probability of a big directional move and more like sharper, choppier moves. That's my expectation. And as usual, that's just one opinion. All right, let's take a look at the sectors that were better. So there's tech at 1.4. So the market was 0.67. Tech was 1.4. That's good. There's the triple tech guys. There's TQQQ at 3.8, and then the broader TECL at 4.4. So that's like the difference between the Qs and XLK. And today it was the XLKs of the world were better at 4.4 versus 3.8. Silver dominating at 7%. So it was only tech better today. So earlier in the week, tech was lagging. And so today was tech's turn to take over. So now if we look at the individual companies that were doing well, we got in the land of tech, Amazon was slightly underperforming the market. But then you have techs, Microsoft, Google, Twitter following through, Apple, Nikola Motors, Facebook. That's pretty good. That's all your tech leaders right there, man. You know, the underperforming techs, Amazon, Nvidia, Tesla, Intel way down the stack. So the pair trade between Nvidia and Intel still favoring Nvidia. So today it was mostly tech for the win. We'll say that for the speculative plays, we got Win and Kodak up 7.5% and 8% respectively. The only other things besides tech that worked today then were some of the metals. There's Alcoa, and we already mentioned silver, and Home Depot, just quietly getting it done. All right, what was worse than the market today? Let's look at sectors. Consumer discretionary 0.5, Brazil 0.4, emerging markets 0.3. Now getting into negative territory, Mexico flat, finance flat, Japan flat, oil flat, materials minus 0.4, healthcare minus 0.5, energy minus 0.8, Wheaton minus 1.4, oil exploration minus 1.5. So only tech made it a big, strong day up. So that was a very narrow focus for getting well today. Everything else was underperforming. The individual companies that underperformed: CAT minus 0.4, Nucor minus 0.5, Clean Energy minus 0.5, Cliff minus 2, Salmon Property Group minus 2, Devon Energy minus 2.2, US Steel minus 2.6, Virgin Galactic now under 20 at minus 4. So lots of tradable moves today in both directions, but it was all tech all day today. I neglected to mention Coca-Cola, because we talked about Coca-Cola as one of those non-tech uh, oversold conditions. I think this may have been Bob. Was this yours? AEM. Yeah, I think this is Robert's. Just this is so nice. God dang it! Doing routine things routinely. That's what my one of my best bosses always told me. Doing routine things routinely. And so first we're going to look at what he's got. He notices this low to a high to a low, and it finds support. You know, if we're being honest, this is slightly higher. This low to that low, it is slightly higher. So that's a good thing. But for practical purposes, it found support where it found support before. And when it found support before, it moved out smartly. That much. I'm going to draw this as a box because that feels proper. So in that space and time, it moved that far. It took a little bit longer to fall that far, but the next time when it makes that move even faster. So he identified the change of season with the TC 2000 bundle. Just saying, unpaid political, commentary. Appreciate it. He bought it early as a result of a false flip. And I think that's what he's calling this, is that it tried to go up and then it was going to flip, but it didn't. It held support, and so he saw this as a support level, if I may paraphrase. And he saw the new that new low being formed, but it was already the spring, and he just said, since I'm going to get out of this thing down here anyway, that's not a bad entry. You're minimizing the cost of being wrong, and you get an even better entry. Just as a point of comparison, if we took the that descending PSAR and then took the -2, then you get an entry. Let's see here, like right about in here. So I kind of like that. By the same token, you would get that entry. And if you took that entry on the first one, I would not be offended if you used the bottom of the dragon, especially because this thing had raced so high, pulled back, and then took off again. It's doing this. And you can see that that was the turning point. So if you decided in that case to take your stop at the belly of the dragon instead of all the way down at the PSAR, I wouldn't be offended. Then that lets you get to no lose plus dinner for two just a little quicker. In this case, you'd probably do something like that. And then when you see that big move up there, you probably come to the 2-bar low and do something like that. And then you see this bar closes well, so you might just decide to come up to here. Once it opens there, maybe you just decide to come up here and place that like that. And you're just hitting those pegs as you go. And then you might say, hey, here's the 3-bar low right there, bang. And then you end up taking the sniper exit like right there. So if you're managing that with a sniper, that's how that might work. But the point I want to make is that he's seen a move of the magnitude of this box already. That's also this size of a box. And even if we saw that as, even if we just took the second leg, that's how far it moves as it oscillates. And then you have this move, same size, from 82.40 to 83.40. So it moves $1 on 80, 1.25%. So as a frame of reference, if you're playing the supported fall crossing to the downside, there's an entry right there. Like if you took the second PSAR dot, there's an entry short. And again, this is one of those where, as volatile as this had been, I wouldn't be offended if you took that as your stop or that as your stop. And I like that Bob took like the bottom of the RL90-ish instead of coming all the way down to the previous RL10. I think that's pretty nice right there. Man, that's a good entry. That's a great entry, great stop. And that returns 5.5. That's what you get when you do routine things routinely. I just think that was tremendous. There's a short. I mean, this was probably a short too, but this one certainly is. When this violates. So that'd be a supported spring. And this one would probably be a collapsing dragon. And on either one of those, a PSAR is fine. And then maybe you get a. I probably would have taken this right here on that sharp rebound, because that's a 1, 2, 3 right there, and this is something that's outside the Z2 and then rolls back. So 1, 2, 3 exit there wouldn't be bad. So AEM, Americo or Agnico Eagle Mines, in the gold sector. Pretty good stuff, Robert. Pretty good. Did I just close that out? That'd be so stupid of me. All right, let's see what we can do here. Okay. All right, so we got Apple, and this is Pavel. Looking at Apple. So we got to get some resilience in here, mainly being battered. Okay, get over it. Today you were battling with EWZ. We saw that was an underperformer today, and only the tech. So here's the one where tech and find the mover, and it's easy. Helps offset the troubles with Brazil. The first trade, this feels like, why What are we doing there, man? You know, this is something should be happening down here and then riding this wave. So you got up one, back one, and up two. So if we're going to be on that second wave, we should be entering here, not at the top of the second wave. And so that one is a fractional loss. So I'm not, that one, not so much. This one, emotional tenderness here. Here's the PSAR flip. There's the harsh winter. PSAR flip. There's our entry. There's our box. And that gives us a better win, slightly better than no lose plus dinner for two. Here's our Z. Here's our pinch. Here's a breakout. Here's a second breakout. This is a great entry. Nice tight stop. And trade 3 is 2R. Well done. But there's another 2 on either one of those. This is fantastic. This is now you're getting your stride. And probably you're noticing tech is doing nothing but winning while everything else today is sucking. A nice Wu Wei exit and an even better reversal. And you're baking bread, so you didn't get that reentry and that reentry or second or third position. I'd probably even tried a fourth one and then probably taken this as you did. So that one is 3.5. So this one to here is 3.5. So there's probably another 3 if you get 1, 2, or 3 of those, because this one is a scratch. So there's probably another 3R available using those two. This is a reasonable try, I think, except I would say at 15.30, not so much. That was just giving back 1. So really, that's basically 6. So I was going to say 5.5 plus this one, minus 1.5. Gives you about a 4.5 day out of all this. When these work, it should feel real easy. Don't try harder to make it work. Find the mover. Pay attention to the things that are working. Find the mover, brother. Good lessons. I've already seen that one. All right. Opens here, runs up, runs down, fails to close the gap. And now we're 30 minutes in. That little bend in the river right there. And then probably a stop right there. And then you probably get this piece and just take the PSAR. And then you would either re-enter here or here. I'm not offended by that exit. That's not bad. Here's our Z3 pinch breakdown, though. This is about where we got to get short with a stop above the piece, the VWAP, or the far side of the Z3, because you have a Z3 pinch right here. that Z3 pinch. Still, this is a nice entry or an exit to get paid for 1.6. I like the quick reversal. I like getting paid. When you have these pieces here, you got to watch and take advantage of those. That's what makes this such a good short, is the breakdown of those sideways quiets. If this hadn't been running out of time, like if this was a morning session, I would be looking at this and being ready to go here or here, because going to the upside, it's going to get all the way back to here. And if it's the downside, it's going to go to there. So you have a really nice move in either direction. Okay. I think we saw this one yesterday. Yeah, that was yesterday's Dow. All right, shifting to today's report. All right, let's see what we got there. We've seen today's report already. Optimistic for tomorrow, but waiting for tactical plays. Love that bullish normal. Everything overbought, decisively overbought. ADX getting stronger now. It's at 17. That means the swing is just starting. 9.5% above the 200-day moving average. Notice the even the risk Z is starting to curl back up for a second leg up, and it came back to 1.0, so it's not abnormal anymore. ATR at a minuscule 1.10. It feels like a very quiet, but it historically that has been like 0.75. So we're still half again as volatile as long-term averages. But that's a far cry from what it was a month ago at 2.4. So there you are. It can stay overbought a long time. Only EPP and ILF are under their 200 period moving average. So those would be the first two places I would look to get short if we saw markets selling off. I'd look for weakness there. Max Pains, look, there's Intel, Chevron, Travelers, Boeing, and CAT. Adding General Electric and Gilead Sciences and Wells Fargo. Big winners, closest to their 10-day highs: Diamond, Cisco, McDonald's, Visa, Home Depot. Lots of dojis today in the Dow. Plenty of auto framers that test out better than 2 to 1. We have Walmart is a triple screen and a 551W. Been a while since we looked at that one. Come on. Come on, fellas. Draw for me. Well, we're not going to be able to see it. So Walmart 5DD and a triple screen. Can't tell you how irritating that is. I really want to see Walmart, so go take a moment. All right, so here's Walmart. So this is characteristic of the 551W. Pull that out of the way for us to see. And a triple screen. So they both take the form of a strong move and then a pullback to some measured level and the beginning of an upward move. And then we can we frame that trade like in two stages. One of them, we say if it gets above that level, we're going to go test the previous high. And then if that works, we'll go project another box of the same magnitude. So there's kind of a, and then I like to see 2-to-1 inside here, and then another 2-to-1 inside there. And so we've just got this tiny little risk. This tiny little risk box here. So let's take a look at this, shall we? This would be the test of that like 10-day high. This would be probably our risk box. So you can see that we have like 1, 2, probably 3 right there. We have an intermediate hump of the dragon. We have a Z1. We have the skin of the dragon. So there's measured checkpoints along the road. So we could say, is it really moving out the way we want it to? We might be interested in a short there, certainly a short here. And then our targets to the downside would be the Bollinger Band mean, fair value, closing of the gap, and then Z1. So if you get this thing to fail, it has 1, 2, 3, 4, 5 checkpoints all the way down. It'd be really amazing if it got that far. And then on the way up, you have 1, 2, 3, 4. And if it can get above this, so if the move is like that, then you could get another move up here to probably 137. So this is typical of the triple screen that pulls back below the 20-day moving average and then starts to make a gain. So that's the triple screen pattern. Thanks. Hat tip to Alexander Elder. The 551W is a sort of a relaxed version of that. It also features a strong move up, a pullback, and then it has one positive day of activity. So the first 5 means that if I look back 5 weeks or 25 days, it's probably somewhere in here. So when I look at 25 days ago compared to today, that's an upward move. So it's positive on the 5 weeks. And then if I look at 5 days, I go back 5 days, 1, 2, 3, 4, 5, and here was the 5-day high, and it's lower than it was 5 days ago. So it's up, it's pulled back compared to the 5-day high, and then the last day is a white candle. So it opened and then closed higher. That makes it a up over the last 5 weeks, down compared to 5 days ago. Today it closed higher than it opened. And then on the Williams percent R, which is the W, we can see that 2 to 1 compared to the range risk. And that makes it a 551W. The triple screen is a little more technical and requires, it has a criteria of a weekly positive ADX that it has to meet, and then it had to pull back below the 20 period moving average. So sometimes you'll see 551Ws, but it doesn't trigger the triple screen. But when they both fire, then there's actually some real value in this thing. So that is that. What was that? That's Walmart. That's pretty cool. Let's see. Coca-Cola, KO, is a 551W, is a good frog box. And other than that, it's just quietly being itself. So let's see what Coca-Cola does for us here. Yep, see the same kind of pattern. So a turning point down here and then a strong move up, measured pullback to the Bollinger Band mean, which holds, and now it's given us this little move right here. So that's your 551W. Today's price was higher than it was 5 weeks ago, lower than it was 5 days ago, and then today was a big white candle. So when we frame that trade, what we're doing is freezing up the screen. Too slow. So we're basically just putting a box on this one, and if it breaks out of this yellow zone, we're long, and we're looking for, a move back to the 10-day high-ish or the Z1, something like that. If this breaks down, I would wait for it to break down, I think, below that Bollinger Band mean. But I wouldn't be offended if you took this as the short and you were playing to the Z-1 or the bottom of the dragon. And that would be the play. And then the upside looks like this. So that's Coca-Cola 551W. Nice trade. Nice trade frame there. Just a handful of dojis. You can see 551Ws here in Latin America and Brazil, and they both test out pretty well on the auto framer. That's pretty good. So I don't mind that. Brazil and Latin America. That one feels even easier. Because we have a nice solid support here. Nice big move. Held support at the Bollinger Band mean, so it feels like it's locked in those gains. So when this low is replaced by a low that goes to there, then I take that as the pluses. So now this little rebound action. So if it gets above 32.25, I can now play this as my risk box. And then we go 1, 2, and play that to the Z2. Yeah. And then if it breaks above here, then that's really going to go. And then that's the upside. That's a pretty key test level, though, because we had this peak of the RL10 is the peak of this RL10. So we're playing for this gain. And then this is where we'd want to have two positions. On the short side, if this 31 fails, this is where I add a second position at 29.75, and I aim for this. Then if that fails, it's all the way back to here, Z3, closing the gap to here, belly of the dragon. And then if you had two positions and it started this big collapse, you'd be good to go. And then you want, a fourth position in if this fails. So 1, 2, 3, 4. So now it's got to get above this to keep going. If this fails, it's down to here. So that's a good trade in either direction. I like both of them. I like Brazil a lot. Silver, gold, Apple, and Disney. Suffering, Intel and Goldman. Intel and Caterpillar 4 and 3.6 to 1. There's Brazil. Nice. Intel is still it's 6.25 ATR below its long-term fair value. Very interesting. This was the big loss from earnings. This was the secondary follow-through sell-off. So one big loss, two big loss. This is the first support, approximately where it found support before. First retracement, pullback. So this is how much buffer we have. So if this thing were to go up from here, so support level 1 or 2, stop level 1 or 2. Clearly, if it breaks 2, you want to be short in a big way. And if it broke below 45, second scoop. But now if you can be long here, and it breaks above the 2-day high at 50, psychologically sound, and that's my risk. I've got 1, 2, 3, 4 to the PSAR. And that's where the gap was. And if that breaks, there's the gap closure, and there's the Bollinger Band mean. So you would go 1, 2, 3, 4, 6, 7, 8, 9. So this price distance here to the fair value from the RL10, what do we say, 6.5 ATRs. So if you risk 2 ATR down here, you're aiming for 6.5 on the way up, and you would take half of that, right? So that's the low risk idea in Intel. Apple, on the other hand, is 7 ATRs above its fair value. What's that look like? Just as a point of reference. Of course. RL270, there's your RL10. So this distance between them is 7 ATRs. We saw before, in terms of relative power. Why are you interested in when there are that many ATRs below fair value? Oh, that's right. That's what it looked like one of those days back there. And it was 6 ATRs below the RL270. And so then when you project that forward, and you say, how far could that thing go? You wouldn't be surprised if it got that far. Now, it took a long time to do that, but that's the reason you're interested in the supported spring crossing, like right there. And right there, and right there, and right there. All of these little breakouts above previous. We even had this one way back when there was that 3 or 4 day pullback. We said, yeah, we should just buy it right here at 370. Yeah, that's looking pretty smart. course, what's better is the capture here and then the reentry over here. That's what makes this fun. Is the capture at the PSAR and then the reentry at the supported summer, fall, summer. So this is why we care about those large moves away from fair value in either direction. This is, my favorite pattern over here is these guys that turn around. Yeah, Ken asked, does the 551W work in reverse, like 5 weeks down, 5 days up, 1 day down, and then framing it as a short? So that would look something like, I'm gonna guess. I'm gonna say I haven't tested that, but the question was, absolutely yes. I don't actually even need to test it because it's like a pocket short front running a collapsing dragon, and you'll find that gives you if you're trading the supported fall crossing or supported winter crossing, you're going to be really happy that you did. Just to use the white space up in here. The question was the reverse of the 551W, but to the downside. So we would want something that had a red candle today, because we want it to close lower than it opened. So we'd have some kind of red candle today. And then we would want it to be lower than it was 5 weeks ago. So there's some great big sell-off. That's the 5-week sell. And then we'd want to have, some kind of, 5-day gain. So it's higher than it was 5 days ago. And now it's got that 1 day of pain. So we're buying the second day of pain. So we would actually be short. We'd be short there. And then on that play, your second short is here. And this would probably be, if you had you'd probably see a collapsing dragon. This is like a little pocket in here. It was horrible. And this is just like you'd see that as a failed owl or a supported fall crossing to the downside or a supported winter crossing. You'd see like winter, spring, winter. So supported winter crossing is where you get into this trade right there. So we have multiple ways to get that. Okay. Yeah, if you were auto framing it, you'd look for a 10-day low, but it actually, all these ones on the downside are different because the pain happens fast, right? So I use the 10-day high as on the other side, because the characteristic move on the upside are these kinds of moves. It gives you a little slowly grinding, climbing up the stairs, and then jumping out the window. So in this case, when you had a sell-off, and you said, oh, there was a 10-day high, yeah, I could get this measured move to the 10-day high, and it might take some time to do it. But on this one, where you're trying to get short in here, and you say, yeah, 10-day low, I don't even have to calibrate that, because when that thing fails, it just drops like a stone. Like this one right here. There was a, I guarantee there was a big sell-off, and here was a 5-day high, and here was that low. Nothing, just smash. And that was the 10-day low. But when those things collapse, they just go. Whereas this thing, you just notice it's grind. Finally gets to the 10-day high up in here. The downside trade. That's the easy one. Just saying. So that's an example of two RLFF extremes, and the kind of just nice. I mean, in some sense, that might be all you need. I mean, I think you can make a living just on those. Very nice swing frames. One-day moves. Simple criteria. So what this looks like is that it's normal. It's had a trading range like this. These are the, the daily ranges have been like this and like this and like this. So you get some kind of average range that looks like this one. And then today's range is a tiny little range. And then what we're doing is that if this thing breaks out of that box and just has a regular range move, you're going to get a move like that, a large one-day pop. And so when you see 3-to-1 in Walmart, that means that today's little range in here, was 1/3 of what this normal range bought. Look at that, almost drawn to scale. 1, 2, 3. Okay. So these are things that tend to pop when they break out. So range compression and then rapid range expansion, like popping popcorn. When you see lots of things in the fall and lots of things in the summer, that means it's well above the zero line. And then these that are in the summer, they're gaining and growing, and these are the things that are starting to lag. No surprises. Defensive plays versus offensive plays. And then he's over here in the winter. So you get a lot more differentiation in individual stocks than you do in the ETFs. So that's why I look at both. These in the winter are just getting crushed. And here's your big winners, Apple and Nike. Big losers, Intel and Boeing. They're in the winter and then deep below their Red River. Winners win. All the techs plus Home Depot and Disney. Winners winning. Losers losing. Just an orderly upward move. It held support at the Bollinger Band mean. It is not, the slope stat of the 30 is not yet above that crucial Z1. So there's plenty of room for this thing to keep getting better. And this is what's nice, is it's testing that previous high. Back to low normal volatility. Routine. Look how the lack of volatility based on the ATR percentage. Man, that's that key 1%. Just look at 90 days ago, that thing was above 8%. 1/8 of the volatility today than it had during peak sell-off. That's how fast things can change. RL30 slope still pretty strong. The Z-score. The long-term strength still there. Starting to pull away from the river. The last time it did that, it made a nice move, but then the sell-off was sharp. That's the kind of volatility spike that I'm talking about. We got to be prepared for. Okay. That's everything I want to cover tonight, guys. I'll get this processed and posted. You guys take good